Hey everyone, welcome back to Wealthy Granny, where we dive deep into the hottest stocks, earnings reports, and investment opportunities. If you're new here, hit that subscribe button and turn on notifications so you don't miss out on our breakdowns. Today, we're talking about CAVA Group, the Mediterranean fast casual chain that's been turning heads since its IPO. But hold on, because their latest Q2 2025 earnings report just dropped on the 12th of August, and the stock took a nosedive. Shares plunged nearly 20% in after hours trading and are down about 40% year to date. What's going on? Did CAVA fizzle out, or is this a buying opportunity? Let's break it all down in this video. Stick around till the end for my take on whether you should buy, hold, or sell. First off, a quick refresher on CAVA for those who might not know. CAVA is like the Chipotle of Mediterranean food. Think fresh pitas, hummus, falafel, and grilled meats, all customizable and focused on healthy, flavorful eats. They went public in 2023 and have been expanding like crazy, riding the wave of consumer demand for better for you fast food. As of now, they've got over 300 locations across the US, with big plans to hit 1,000 by 2032. That's ambitious, right? But in a tough economy with inflation biting and consumers tightening their belts, even hot brands like CAVA are feeling the heat. All right, let's get into the meat of it, the Q2 2025 earnings numbers. CAVA reported revenue of $278.2 million, which is a solid 20.3% increase year over year from $231.4 million in Q2 2024. That's impressive growth, especially when you compare it to 62.6% over Q2 2023, showing how far they've come post-IPO. They opened 16 new restaurants during the quarter, bringing their total to around 350. Digital sales were strong too, making up 37.3% of revenue, which shows their app and online ordering are clicking with customers. On the profitability side, net income came in at $18.4 million, down slightly from $19.7 million last year. Earnings per share, EPS, were $0.16, which actually beat Wall Street expectations of around $0.13 to $0.14. Adjusted EBITDA, that's earnings before interest, taxes, depreciation, and amortization, jumped 22.6% to $42.1 million. Restaurant level profit margins were healthy at 26.3%, proving they're efficient operators even as they scale. But here's where things get tricky. Same restaurant sales growth, a key metric for how existing stores are performing, only grew by 2.1%. That's a big slowdown from 14.4% in Q2 2024 and 10.8% in Q1 2025. Analysts were hoping for something in the 6% range, so this was a miss. Actual foot traffic into stores was softer, especially in June and early July, before picking up a bit. CEO Brett Schulman called it a fog of uncertainty in the consumer environment, with people navigating economic headwinds like inflation and policy changes. Now, guidance is where the real drama hit. For the full year 2025, California VA lowered their same-store sales growth forecast to 4 to 6%, down from the previous 6 to 8%. That's a 200 basis point cut, signaling they're not as optimistic about consumer spending. On the flip side, they're ramping up expansion, increasing new restaurant openings to 68 to 70F from 64 to 68. They kept their adjusted EBITDA guidance steady at $152 million to $159 million, and restaurant level margins at 24.8% to 25.2%. Pre-opening costs are going up a bit due to the faster buildouts, but overall, they're betting big on growth through new units. So why did the stock tank? Well, despite beating on EPS, they missed revenue expectations. Analysts wanted $285.6 million, but they delivered $278.2 million, or $280.6 million in some reports. That revenue shortfall, combined with the same-store sales guidance, spooked investors. In a market where growth stocks live or die by top-line momentum, a slowdown in comps screams deceleration. Rivals like Chipotle saw same-store sales drop 4%, and Sweetgreen stock got hammered after cutting guidance too. It's a tough time for fast casual. Consumers are value hunting, and without planned price hikes in 2025, CAVA has to rely on traffic and new stores to drive growth. Post earnings, as of the 14th of August, the stock closed at $68.93, down sharply from its highs earlier this year. Year to date, it's lost about 40%, underperforming the broader market. Analysts have mixed views. The 1 year price target is around $92.21, suggesting about 34% upside from current levels. Some see this dip as a buy the dip moment, praising Cava's strong unit economics. New restaurants are hitting average unit volumes, AUVs, above $3 million, way above industry averages. Others worry about margin pressures from higher wages, input costs, and that fog Schulman mentioned. Looking ahead, Cava's got some exciting stuff in the pipeline. They're investing in tech, like a $25 million Series B round for Hyphen, a restaurant automation startup that could speed up orders and cut labor complexity. Think automated make lines for bowls and plates. Chipotle's invested there too. They're entering new markets like South Florida and the Midwest, and that 1,000 restaurant goal by 2032 implies massive scale. If they execute, this could be a multi-bagger stock. But risks are real. Economic slowdowns could hit discretionary spending hard, and competition from other healthy chains is fierce. From an investment perspective, is Cava a buy right now? If you're a long-term believer in the brand, like I am, this pullback could be golden. Their PE ratio is around 68.6x, pricey but justified for a high-growth story. They've got zero debt, $385.8 million in cash, and strong free cash flow of $21.9 million year to date. But if you're short-term focused, wait for signs of traffic rebound in Q3. Personally, I'd accumulate on weakness, but do your own research. I'm not your financial advisor. What do you think? Is CAVA's dip a buying opportunity, or are the cracks showing? Drop your thoughts in the comments below, like this video if you found it helpful, and subscribe for more earnings breakdowns. If you want the full earnings transcript or investor presentation, check the links in the description from CAVA's investor site and sources like Yahoo Finance and Seeking Alpha. Thanks for watching. See you in the next one.